Hey guys, good morning. Tom Wilmot for the Zealander Fly Trap Forex trading system. And I wanted to pick up on what we talked about on Friday through some tweets and some charts that we presented online, and follow up on the US Japanese yen pair and discuss what we saw in advance and what actually transpired during the day. So in fact, what happened, and this particular area over here led into the London session on Friday early morning U.S. East Coast time. And in particular, this volatility took place when the Japanese central bank decided not to really put the stimulus on the table that people had been anticipating. And as a result, the Japanese yen took off again to the upside. The dollar had significant weakness. It bounced back a little bit before the U.S. session. This is 7 a.m. East Coast time in the United States. And we can see here that prior to the opening of the U.S. markets at 9:30, when the U.S. blew it and missed their GDP goals, in terms of the estimates that came out early Friday morning, 8:30 East Coast time, the U.S. dollar continued to sink during the day. Now, we were involved in the trades and posting some things in this area right here. We thought perhaps, and this is once again a 15-minute chart, I think we were trading off the 5 at that point, but we were talking about a couple of things. First of all, our trend Magic and Chandelier combination indicators here, all in red, showing the downturn on the 15-minute chart for the US dollar. Also our bands 12, 16, 20, and 24 EMA, all showing a downward thrust, except for this one place after the London session opened where there was an attempt by the bulls to push the dollar higher. And we thought perhaps we could get back up into the 38 area here, but the dollar's fate was sealed once that GDP report was unleashed at 8:30. So in any event, then we had to decide what was our next target, and we posted it on our Twitter account that we thought the 127 would be in play. Now, what we did was to take a look at the high to the low with a Fibonacci reading. You can see that the mid-range Fibonacci from 38 to 61.8, 1.8 retracements were not touched except early in the morning, and that as we continued into the day as we expected, we were going to try to get down here and touch base on the 127, and that was all the way down at 101.95 or 96. It, I think, finally had a low down in the 101.97 level late in the day. And then, as you can see on Friday, as the market closed up for the summer afternoon Friday session, things just went into consolidation mode after that target was in fact reached. Now, interestingly enough, the pound and the euro did not reach a 127 target on the downside. In fact, it was the dollar and the dollar weakness from the GDP report that I think really sunk it for the balance of the day. So, okay, now you say, what's next? Well, we can see that throughout the early session here, the U.S. dollar tried to get back to the zero line, which was the original point on the downfall after the Japanese bank report early on Friday morning, and it's kind of traded in this range here. We still have two red lines on the 15-minute chart, so I would say it's too early to get repositioned for the upside, but we could conceivably, after the 127 has been hit, typically you'll find that you'll get a pushback maybe up to the 38 retracement again. It's also possible, however, that the double whammy, the Japanese not stimulating as heavily as people thought, and the GDP report in the U.S. Will lead us to further kind of consolidation for a day or two, as attention now is switched to the Australian dollar and the RBA's potential interest rate announcements and potential lowering of interest rates rates in this evening. And today, obviously, is the 1st of August, and of course, we're looking forward to a jobs report on Friday. So we may see some consolidation continue here in the dollar-yen pair over the coming 24 to 48 hours. We'll keep you posted with further updates as soon as we have a perspective. Thanks, and have a great trading day.